Part 3, Private and Public Investment Synergy, Risk Management, and Building a Durable Hedge Fund Firm. Let me ask you a question about the synergy between the private and public investment. Being in Silicon Valley gives you proximity and the pulse, right? So you know what's really going on around. How does that translate into real-time insights and the other people may miss?
Jeff, I think first of all, we are all looking for a source of edge, right? As investors.
Yeah.
I believe that our edge is being in the valley, but just not being in the valley, right? But being immersed in the ecosystem.
Yep.
What does that mean in a real day? And then even more than that, being immersed in an ecosystem with my wife who runs a world-class venture fund. So in our house, even though we run different firms altogether, you will observe that our logos are actually intertwined. So in China, you have this concept of yin and yang, right? So look at the two logos side by side. It's the same font. She is black on white background and white on black background. So it's actually yin and yang. And so people don't, by the way, I'll give you a small segue. Even the word octahedron has a has an Asian context to it. Do you know why?
Yep.
Octa is ba, money, ba. So octahedron, so it turns out that octahedron is the structure of the silicon dioxide molecule that basically is the source of everything we have in the world today. So sand, we all come from sand. Silicon Valley is silicon dioxide. Let's be real about it. The structure is octahedral, but really it means money because the number 8 is lucky in China, lucky in India. So it comes from that. So that's just an interesting side note.
Very interesting. Again, I'm just imagine you're working couples and then discuss different opportunities, different things all day long.
But Jeff, back to your point though, back to the edge. See, so the edge comes from 3 places. Obviously, being in the valley, our LP base is the who's who in technology. And then we've got this huge network on the private side. So a day, for example, so at the last edge, because of this immersion, you're right. I think we're always working 24/7, but it doesn't feel like an entrepreneur comes. Yeah, can you hear?
Yeah.
No. So an entrepreneur comes to your house for dinner. Is that work? No, it's not. But what are you discussing there? Trends, insights, industry. Which smart engineer went where? What's the gossip? What's the scuttlebutt? And by the way, Tiger training is an art of asking good questions and the art of scuttlebutt investing, right? You find out what is happening in the industry. We can do that on a very organic basis. My wife does dinners all the time. So we have the best entrepreneurs in the world, the best venture capitalists in the world, literally having dinner or lunch on our dining table. Number 2. So that is just insights on insights. Number 2, I am not used to expert network in years. Because if I want a really interesting insight, which is obviously non-MNPI, I'm pretty sure I can get to any senior vice president or C-level exec in the Valley. I'm pretty confident. So let me give you an exact case study of what happened, of how we made money on this. See, guys, remember, let's go back to the difficult times because I actually, as Jeff, it is easy to be happy and get excited when you're performing well like we are now. But I always tell my team and I tell our LPs, let's go back to the difficult times. What did we learn during the famine? So even then, during the famine, it was a very difficult time in 2021 and early 2022. The markets were imploding. Most investors were saying, oh my God, this is the buying opportunity of a lifetime. Let's buy more software, more software. And they kept buying all the way down, right? Which is why people had terrible 2022s. We actually had an okay 2022, even though we got hurt in the first quarter. But what happened then? See, guys, remember in software, every year in the fourth quarter for software, remember all software companies end their year on January 31st. Why? Because that last month you're selling, you're closing the quarter. You've got this called the budget flush. Everyone just has to pay the budget. So software companies have big billings growth in that quarter, big revenue growth that quarter. So remember, we were coming through 7 years of SaaS, right? SaaS everything, digitize everything, COVID everything. But by 2021, stocks were crashing. And then I said, okay, what is happening in software? Because for the first time, it felt like there was not any exuberance. It was getting difficult to sell. So I called a bunch of our LPs up, who, by the way, are some of the best leading heads of the biggest venture capital firms in the world. And I said, hey, you guys are software experts. What is happening with your bookings for the quarter? How is the bookings looking? So I called four LPs, four big, very well-known venture capitalists, multi-billion-dollar funds. So enough data points. And they said, actually, surprisingly, we got our first quarter board numbers and they missed expectations. And this is after years of blowing through expectations. They missed expectations. I heard the same story over and over again. And then the realization was, oh man, something has changed. For some reason, the world, corporate America, is not willing to spend more money on software. And this was even before ChatGPT and OpenAI. That happened in September 22, actually November 22. Something happened. That insight made us do more work in software. So instead of going long software, because everyone was, because that was the highest beta trade at the time, we just went huge short software. And we shorted everything from A to Z. It didn't matter.
Do you short the using ETF to short it, or is it you still shorting the single name?
We don't believe in shorting ETFs because I think we are smart enough to create our own custom baskets. So we short by themes. And the theme that time was software has hit a bit of a wall, and therefore all the excesses in software are going to get reversed. It'll take at least 6 to 8 quarters to reverse this. So we were short software all the way from, I want to say, May 2022 all the way till the middle of 2023. So almost 6 to 8 quarters shorting that. But we put a 3,000 bip short position in software, or 3,500. We actually took the entire firm to net neutral. So I usually typically run the hedge fund between 30 and 60% net long. I think we're running like 3,000 bips long. And then I found this software idea. So boom, we just collapsed it. So at one point we were running like 5% long, but it was not by design because we found a really interesting idea. But that's a case study, Jeff, of where people, process, location, connections, relationship, insights, all work together to get the flywheel spinning. So a few minutes ago, I said the entire world, I know the bull case on AI, Jeff, the bull case on AI. Everybody in the world knows the bull case on AI. In that environment, it is worth asking what could go wrong, because that is the way we think. We're quite contrarian. So one of the things we've picked up in our conversations with people is agentic AI. So I just talked about agentic AI in enterprises is not working out. And even worse, Jeff, nobody knows why it's not working. They still think we got to throw more data at the system and it'll work eventually. That is called hope. That's not a plan. That's hope. That's not a plan. So far, that is the first speed bump I've seen. This is not to say that other agentic cases doesn't work. Customer support works excellent, which is why my wife she's invested in a company called Decagon, whom I think you met at LP Day. Excellent numbers. My wife Anu believes that there's this huge potential for a next generation AI-driven cloud infrastructure. That's why she's invested in the next version of AWS, which is called Render. She's invested in maybe the next generation of Palantir. So AI services, she's got that company called Distill. Excellent CEOs, right? So on and so forth. She's a prolific investor there. So she doesn't have to make money on doing speculative quantum or hard tech. Doesn't have to do it. Or defense tech. Now the point is, okay, so customer support works well. Coding actually works decently well for the mass market of coders. We know that things like our friend who runs another case study. One of my friends and LPs is a guy who has sold a company 3 times. Now he's on his 4th company now. And he does automation agents for security operation systems, SOCs. And these are people who do security operations. They go and monitor the security network all the time. This guy built an agent for that. It's working really well in that niche case. Every company in America has a security operations center. It's working there. I'm hearing it may be working okay for medicine. It may be working for certain use cases, such as some niche cases in legal, but not mass market yet. It is working in ServiceNow, a company that we own. It is working quite well for ticketing. But whenever there's a complex use case, it is not working. How do we get that insight? 3 weeks ago or 2 weeks ago, my wife had brought together the best young VCs in the Valley. Every firm was represented, I promise you. And these are young, brilliant men and women. And I said, okay, let's talk about agentic AI. And one company that is prolific, as one of the best in software investors in the world, said, man, we have met hundreds of companies. Agentic AI is not working.
Do
So
you
the VCs
believe
know it, but
those companies already spend enough efforts and try to get the agentic AI work in their big organization, or you just feel that they tried it but it's just not working? Tell me a bit about that.
I don't know so remember, AI efforts have gone on for 1.5 years now. It is too early to tell. Maybe they don't have enough data. Maybe they don't know how to do it. Maybe they don't have enough money to do it. It could be a variety of reasons, and maybe we will crack the code. And I am optimistic we'll crack the code. I think it'll happen. All I'm saying is, look at the juxtaposition between everyone saying everything's going to work all the time and we're going to be in this amazing new journey versus the first speed bump. Again, this is an observation, not a judgment.
Okay.
But this is the job, Jeff. The job is to have nuanced understanding of expectations versus reality. This is just one. And the reason I give this example is you said, how do you get insights? The insights come from the best VCs in the world sitting at my dinner table 2 days ago, which nobody in the world else can do.
Very valuable, yeah.
By the way, you think when this is a closed podcast, right? It's going to be sent to certain clients. It's not going to go to the world, but you can have an open discussion. Do you think anybody's going to say anything negative to stop the party publicly? Hell no. Nobody will say that publicly. It only is talked about privately. The other thing about the Valley that's very unique is private networks. Man, it is so deep. So you know everything about everything before the guys in the East Coast even wake up. Let's put it that way. And by the way, after all these advantages, let us be humble. It is still hard to make money.
Absolutely.
Returning at high rates of capital is so hard. And so I think it is important for us to be extremely humble, but try to get every advantage we can, but understand that it is LP's capital and we are just custodians to the short term. And our job is to do the best and be responsible allocators of capital.
Yeah, making high return certainly is difficult. And also another important part is actually manage the drawdown. We don't want to have a huge drawdown because it takes much bigger effort to recover from the loss. So let me ask you just a quick one about 2021-22, the drawdown lessons. What sort of lessons you learned and why did it happen? And also, how did you really recover the loss at that time?
So, Jeff, one of the things I did not appreciate, and that's because I did not have the training, is to be a good risk manager. So I did not have the training. So I ran a portfolio at Altimeter, but we never really focused on risk. It was all about picking great ideas. So when I went into 2021, things were great. I had I think 40% plus IRR last in my audited track record. I came into 40% IRR, and then I had another great year in 2020. You think that you can get everything right. For me, I'll give you a bit about the drawdown, what happened. I think I'm a big believer in being very open and talk about your mistakes. So let's talk about the mistakes that happened. The first thing that happened was, remember, in July 2021, I was very nervous about the market. And so the only area where I saw some value was really in China. So I had a big Alibaba position. But I did not risk manage it well. It was a 35% position, big position. And I could not have anticipated or understood the depth of what was going to happen. So that was painful. We sold the position, but the damage was done. Stock was down 20 or 30. Then after that, we were shorting a lot of stuff. And we were shorting it via the structure called put call spreads. Basically, it is effectively paying insurance against a crash. But the insurance is very expensive. We're paying very expensive insurance because the market kept grinding up. So we had it against the NASDAQ. The components, the NASDAQ kept going up because the MAX 7 kept going up. But below the MAX 7, everything was falling off a cliff. We had some MAX 7 exposure, not a lot. Our other stocks, however, was taking a beating. So we had a couple of mistakes in Uber at the time and Peloton. So you see, the mistakes compounded because they were big and all happened together. And then, of course, the entire growth market imploded on us. So on the one hand, I think it was very painful because so many negative things happened together, like a Three Sigma event in some ways coming together. On the other hand, Jeff, we were a young fund. The emotions come through. Maybe I was living in a simulation all this time. All the success at this point was just not deserved. What happens is, at points of your darkest times, it is important to recognize that everyone goes to a point of self-doubt. Maybe this is all a fluke. Maybe I'm just not good enough. Maybe this dream has come to an end. Maybe the LPs will run away, will say, I've given up on you, I'm out. In fact, one LP did say that he lost faith in me and he took his capital out. It happens. You get these difficult messages from your LPs. And so I said the reason we came back was throughout this time, our view was so the way you get through corrections or difficult times is this concept of you got to rebase your positions. You got to say, okay, the past is gone, but now I have a fresh sheet of paper. What will I do today to start again? So after 4 or 5 months of pain in 2021, and then we came in 2020 quite paranoid. We came in I remember Jan 4th, 2020. I said, okay, guys, we got screwed. It sucks. Nobody's getting paid this year. Are you guys still in? So I had to make sure the troops were excited to work, right? Because it's difficult. Everyone is feeling bad. Now, I made some money in my life, but my team has to also, they're building they have ultimately a young, tremendously talented men and women who are putting their life and their careers in my hands. And that is the hardest job, running a firm, because other people's careers depend on you. And that's what weighed down on me the most. I really felt bad letting them down. So we had to go rebase the entire book, which is go back to zero. If we started the firm with this much capital, what de novo decisions will we do today? And what are the 5 things we're going to do on risk management? So we rebuild the portfolio.
So did you realize those losses and then you rebuild from scratch, or you hold on to some of the decisions?
No, it's a portfolio. In some, you realize the losses. So by the way, my view is generally, we always realize losses if the thesis has changed. So in Alibaba's case, we sold. Okay. The thesis changed. The management team is in trouble with the management of the country. So thesis has changed, we're out. With Peloton, the management team lied to us. Thesis changed, we are out. With Uber, we doubled down. And we wrote a open letter to Uber's management. And they learned. So some things you cut, some things you double down, and then you say, oh, wow, there are other great companies you always wanted to buy. Let's clean out the portfolio. It's like cleaning out your cupboard. Throw the old clothes away, buy new clothes. So it's 3 things you do together. But that is only on the stock picking side. What we did not have, Jeff, is till that point in time, a robust risk management process. So I actually built for 3 months. Literally, all I did was build that for 3 months, which is what's our max position size per name based on a quality bucket, downside analysis, back up the truck pricing. When are we going to go big in these positions? And then how do we make money in the upside, and what's our selling strategy? I built it. You've seen the dashboard, wrote it all down. And I said, okay, starting today, it's a brand new company. So in some ways, Jeff, the history of Octahedron are 5 years old, but I almost think like we were reborn 3 years ago. So the first 1.5 years was just big highs, big lows. So I said, okay, first, team, are we going to be resilient? Are we going to fight? Everyone said, yes, we're in. We're not going to leave. And everyone stayed. So I'm very proud of my team. Man, think about a young person like Sunny or Albert or Chris. Man, they got the beating of a lifetime. They haven't made money. They're probably thinking, will Ram fire me? Possible. Nobody got fired. People stuck. And the same team, as we promoted everyone to partner in our LP day, they're all full partners. Now you can see the change in the behavior. Unbelievable, Jen. So what you learn, go back to the original thesis, find great people and let them do their life's best work. I think that has happened for us. So first you're going to manage your own emotions. Breathe, get out of the negative loop. And I went to a performance coach. She talked me through, and I had to fix my own negative loop. Then I got to focus on the team, make sure that they are in a good place. Assure them nobody's going to get fired. I'm going to get through this. I put more capital in the business. Then we had one big LP who gave us more capital to kick off our long-only fund. So again, goes back to great LPs. We built a long-only fund which is basically half the capital now at the depth in March 2022. They gave us more capital. Amazing. Best kinds of LPs. And they've been with us for 3 years. One of the best LPs. Then, de novo, clean sheet of paper. We rebuild the portfolio. And then second clean sheet of paper, we rebuild risk management. And then the most important thing I did, Jeff, is I did not go out and talk to anybody. I said, this is a new strategy in terms of portfolio and risk management. We're going to execute this play for 3 years. I'm not going to tell anybody this is going to work. I'm going to prove it's going to work. And then 3 years, starting, I want to say, second quarter 22, all the way to second quarter 25, we proved it. And then we said, let's get a full year ahead of us then. And then finally, we're going to go to market now in 26 with now a clean track record from scratch with the rebirth. And I'm actually very proud of the performance, but the way the performance is, it's not like aggressive momentum, thoughtful, risk managed, high performance, world-class team that has been together through ups and downs and who are just extremely talented and driven to win. They're all profit share partners. So they're going to make a lot of money this year.
Yeah, it's quite impressive because I saw your team in the LP conference. They have a strong faith in you and also the company, and they are tied together and have gone through the cycle of up and down. That's great, and I'm sure they can overcome any sort of challenge down the road. I certainly see you are a fast learner. You not just spot the opportunity, but you also, when you're facing the challenge, difficult time, you reflect and you find out the issue you just mentioned about the risk management and fix it. But another way of doing that is you can bring in someone who is actually good at that with many years of experience in risk management to cover your shortness. But instead, you decided to do it on your own and you learn in a hard way. You take a longer time, 3 years, to figure out why did you choose this approach versus of just getting someone in with more experience in certain areas so that you have a more complete skill set in the company. I'm just thinking about these two different approaches. What is your thought process for that?
Yeah, Jeff, I think it's such an insightful question. Nobody's ever asked this question before. So but kudos to you for that. Like, you're really pulling out some really good threads. So I think I go back to philosophy and I go back to the great entrepreneurs of our time. I think as the head of the firm, you've got to do everything first yourself and then you outsource it. Because you got, and I do this for everything, investing, for example. I was the original analyst on internet and payments. Now, Albert is my internet analyst. Because I have to be, every boss needs to be in touch with reality. You've got to feel the reality. Software, me and Chris did it together. Semiconductors, me and Sunny are doing it together. Now, once I have confidence, you go off and run your play and I'm going to supervise you. But I've got to know that. I don't want to be fooled by anybody. Physical AI, I'm going to do with the next analyst. Same thing is true for operations. Operations, I think of risk management operations. I have to do it. I have to make sure I understand it. And because it is investment risk management, I may bring on somebody later, but I want to do what's authentically Octahedron. And in fact, by the way, my role in the firm has now become basically the chief risk manager for the firm. So maybe this is my only goal going forward, to make sure that I supervise my analyst team to go for excellence and make sure we don't blow it up. Because I'm the guy with the biggest scars on my back and the most investment experience in the firm. So I think every portfolio manager at some point becomes the chief risk officer. I think that's what happens in most companies. Now I can get somebody to help me with it, but that is my role and my role alone. Because at the end, if I disappoint investors, it is nobody's fault, only mine. So I've got to look somebody in the eye and say, this is what happened. So those are the two things. But even think of the other part of the firm, which is sales and marketing. I think so. I brought the first $500 million of capital together, mostly conversations with the best people in the world. Now we're going to bring on institutional capital. But Jeff, I have two choices. Again, I can go and then hire an IR person, go to a placement agent and say, go sell the firm. I don't want to build a firm that way. I want to know my LPs personally. They're just institutional LPs, but I want to know them personally. Plus, I have to learn the art of closing an institutional sales deal. This is the job of the CEO. The CEO's job is to sell. So my job is to sell. And once I get the first 3 or 4 institutional teams on board, then I've already found the right person to do it for me, which is Hab. So we upgraded our operations team. As had an incredible COO called Anish Mehta, but he was helping me on investments and operations. He was not a COO full time. We got a world-class, probably the best COO on the West Coast of America. And he came to work for us. There's a reason for that, because I think he sees the excellence ahead. He's not a dummy. He is now doing all marketing, all business, and he's given me qualified leads so I can close it later. But I've still got to close it. But I'm also learning in certain cases, we've got to get people up in front. And so I just think it's a philosophy, Jeff. I think CEOs have to do the work first, feel it, and then they can outsource this for leverage. So don't get me wrong. I think we will be. So I'm probably looking for one. So I'm looking to hire, for example, maybe one more analyst, and then probably two junior analysts to help me with the short side. So we're going to even, again, as you can see, as the market goes up, we just got to make sure we are paranoid and have enough shorts in the book to protect us on the downside. So we're spending more time actually on the short side of where could be the opportunities to short things in the world. So I still have to. So my job, I think, if you look at the next 5 years or 3 years, luckily I've got the big pillars, the big generals, Albert, Chris, Sunny, Hap, to do major functions. I've got to do the next wave. Because again, I set the research agenda for the firm. I said physical AI is going to be a thing. I said we're going to do India. Ultimately, the direction of the firm is run by the CEO. I am saying we have to go to institutional capital, which means I've got to do those jobs first. But luckily, I've got great generals and lieutenants to do the main jobs, so I can open up new horizons for our LPs and for the firm. But I have to do it myself first. Eventually, we'll get some leverage. But that's the way I run the firm. I don't like to just outsource and just hope I find the right person. We will do the right person. We have done. Man, I have sent IR notes for 5 years now. There are some things I really enjoy. I actually like speaking to our LPs. If you end up coming on board, I will plan to come to Hong Kong once every year at least, and I will plan to host a dinner with you because I like knowing who I'm in business with. Now, you asked the question, who are the LPs you want? I want really intelligent people who can make me smarter. See, anybody who has family wealth or has built a company or runs a family office, they at some point also went through struggles in life. Building everything is hard. Jeff, you're running a business too. Building Everest is hard. It's not easy. I can tell you that much.
No, not easy at all. You're right. I've done 3 times.
Struggling.
Yeah.
You're also struggling, right? You built Noah, you're building this. It turns out, Jeff, you're also a broken person with irrational optimism because you think
absolutely.
you're a better job.
Even at this age.
But that is the point, Jeff. The problem is nobody can take the entrepreneur out of you. So the reason I like speaking to other entrepreneurs are, it doesn't matter whether you're building a fund of funds or a wealth management platform, or you're building an internet company, or you're building, I don't know, a toilet paper supply company. It doesn't matter. Or a media business, or a mall. I want LPs who make me smart, who make me think of how do you build world-class businesses. A fund is just a business. And the mistake everyone makes, I think, in our businesses, they don't treat it like a business. They think that by being a very good analyst, money will come. That's just not true. There are so many other things. So I think my goal is, I start as an analyst, I have learning mentality, I became good at internet, good at payments, good at privates, good at software, good at semiconductors. Okay, then I became good at, I learned my lesson to risk management, became a good risk manager, proved it over time. Okay, was a good operations person, hired a world-class operations person. Now I got to learn to sell. It just keeps going and you will keep learning. My bet on myself is I will figure it out.
Yeah, I like it.
I don't have the answers today. I will make mistakes, almost guaranteed. I ask everyone to have patience with us because one thing you can be confident about, Jeff, is even if we fail you in the short term, we are killing ourselves to make everyone whole. And we don't take this job lightly.
Yeah, I do
see.
I don't see you are the person certainly ambitious, but have a very clear path to reach to the goal. And also you constantly improve yourself.
The entire goal of every entrepreneur, right? That's what we should all do in our lives. So I don't think there's anything special about me. Just that this is also the one thing I would leave everything. One thing I've learned is, remember, the business of building anything is difficult and it's a grind. One of the big mentality changes I've had over the last 5 years is I've just decided to embrace the grind and love the grind. It is a grind. It is not easy. It is now 7:45 my time. We've been talking for a couple of hours. Been a really fun meeting. Most people, I know all my friends who are working in big tech 5 miles from me, they've already gone home, they've gone to the gym, they've chilled out, they're hanging with their kids, they're having nice dinner.
You just keep working. I do see.
I know, but Anu, by the way, is in Riyadh right now. She's taken 20 of the best founders in California to Riyadh. So she's there at FII. I'm here. But
you pick up the kids?
My kids and my brother-in-law is visiting from Denver. So I'm going to hang with him after this. But you see my point, right? It's always a grind. You got to love the grind.
Yeah, I do see you constantly improving yourself every day to become a more and more rounded CEO and CIO, to build up a strong and durable investment and operations team and make money for your investors. That's great.
Excellent. Okay, let's close this out. I know that it's really takes a lot of time from you, and then it's really appreciated. And let me ask you a quick rapid fire reflection, really quick. One investment you are proud of, or in the one that you wish you handle differently. That's the first one.
The one I'm really proud of, it was very difficult to make at the time. I'll give you two ideas. One is actually, I'm very proud of my investment in ByteDance. Extremely proud of that one. It's very difficult, wasn't easy to understand. It's a Chinese company. The odds were stacked against me. I told my boss, I'm going to quit the firm if you don't put money in that company. So I put my reputation on the line for this one. And luckily, the management team is so amazing. They've proven me. So that's number one. The second one in the public markets is most recently, it really is Google. Because I got so much hate mail for going long Google when everyone's short Google. And
not easy. This one is not easy. Yeah.
It's very hard. So I'm proud of those two. Things that I missed. Is the question, did I?
Yeah, it's the same one, or you want to handle differently. Yeah.
See, one of the mistakes I made, and I've changed it completely, is I was, back in the day when I was a short seller, I was quite prolific on shorting frauds. And man, I sized the fraud wrong, and that fraud went up 4 times against me. 2% position became a 7% position, and I almost got fired. So I will not do that again ever. And yeah, that's the short side. And listen, there are always misses, right? So for example, this time I missed Meta. They had spent so much money. We only made very little money in the position. Normally, I've taken a big position long and ridden it. Did not do it. So definitely some regrets in not owning Meta this cycle. But otherwise, Jeff, we get things wrong all the time. So it is part of the business.
Second question, what keeps you excited about market today?
So I'm less of a market person, more of a stock picker. And what I'm excited today is there is so much dispersion underneath the surface. That's number one. And number two, see, remember, the markets are not correlated. The market will be going up. There are lots of failures in the market, lots of messy companies. So that allows us, at least in our hedge fund, to create good spread. And I'm actually just really excited about the next few years because I think there'll be misunderstood companies on the long side and lots of spread on the short side. So I think I'm quite excited about the dispersion in the market is number one. Two, the other thing I'm excited about is I actually think that this AI thing is going to be very real. It's a little hypey and it's not bubblish yet. It's definitely the hype cycle train right now. But I do think that the one thing that AI is going to do for all of us is going to make the quality of businesses even better. So I think there's going to be massive margin expansion for the largest companies, which means earnings and free cash flow per share are going to go up, which means the best companies are going to reinvest an incremental amount of that back into growth, which means that product's going to drive forward. So what I'm excited about is this trend of technology. I just think it just keeps getting better and better. Each time you think we're at the end of a cycle, technology has this incredible way of finding a new S-curve. It just happens over and over again. So I think listen, I'm 45 right now. I hope we do the next 65 to 20 years at least. So I actually think our underlying companies can compound free cash flows per share at around 20-25%. So if you compound 1.25 for 20 years, that's more than 80 times growth. 80.
Yep.
My job is to just sit in that Gulf Stream and pick. So how lucky are we to find an incredible game to play? It's not like I'm dealing with commodities or oil, something really, or utilities or chemicals or industrials, which is quite boring actually. It's such an interesting space to be in. So I'm very grateful for that, Jeff.
Excellent. Last one, advice to emerging managers trying to build something authentic. This is a new one like you, younger version of you. What's your advice?
Goodness, Jeff, such a good question. You said something at the end. You said authentic, right?
Yeah, authentic.
Jeff, that is such a good word. I think that's the only word that matters in this entire conversation. Authenticity.
Yep.
See,
I feel that.
Listen, we all have heroes, right? I have so many heroes that I've worked with, and we're just standing on the shoulders of giants. Other people have done this job before me. They have given me a chance to do what I'm doing. But I think what is important is find your authentic self. Whatever you're building, don't say I'm building the next version of something. Just build it for you and understand where the market needs the help and go focus on that. Number one, the amount of capital you start with does not matter. It's how you finish that matters. But to start the business, you have to have infinite confidence on your own money making capability. Eventually, you will be discovered if you're good. But you have to have that confidence. It's not the amount of capital that matters. It is not the how good of a marketer you are that matters. Nothing else matters. Your authentic confidence in being you and your authentic way of making money durably. So unique, repeatable, and scalable process to make money durably. I keep saying this again. You have to have uniqueness, you have to have repeatability, and it has to be scalable. And if all three things line up, and you will go through your difficult times and you will get lucky once or twice. And if that happens, it makes a wonderful career, it makes a wonderful life. And then you have the privilege of running capital for incredible institutions that do really good things for the world. We are very lucky to manage money for universities, and we're very lucky to manage money for hospitals. And hospitals in America are really struggling. And each time we can put up world-class performance for them, that you're either giving them capex to build out babies, NICUs for babies, new cancer research wings, keeping their nurses in business. And it's a real responsibility. So something I take very seriously. And I think every emerging manager should imagine success and remember that you are doing a responsible job. Yes, you will get rich in the process, but think about because we are not charities, right? We're going to make money in the process, but make sure that you do something that is impactful for the world. And I'm very grateful for that. So it's a privilege, Jeff, more than anything else.
Thank you so much. I think it's a great conversation. And I also really hope that our investors can really achieve these 80 times returns in you mentioned about 25 years, right? So I did not really calculate the compound 20 to 25. So not just achieve this high return from the investment perspective, but also they can really walk with you and learn a lot from you. Because I do feel that just learning from you, it could be a huge benefits for all of us. So thank you so much.
No, vice versa, Jeff. Thank you for being a partner and a friend and a new friend. And I hope I learn 80 times more from you than you learn from me.
Thank you so much. We'll be in touch, and then we'll continue the conversation, and then hope all the best to you.
All right. Thank you, Jeff. Appreciate it so much.
Yeah, thank you.
In this wide-ranging and deeply personal conversation, Ram Parameswaran shares the extraordinary arc of his journey, from a new immigrant of engineering student to becoming one of the most insightful and globally connected tech investors of our time. What began with a love for engineering and a relentless curiosity about technology has evolved into a powerful investment philosophy rooted in asymmetric thinking, global perspective, and deep product intuition. Ram's early career at Qualcomm, followed by his pivot into finance via the University of Chicago, laid the foundation for a rare blend of technical depth and market acumen. But what truly sets him apart is not just his ability to pick winning stocks. It's his evolution into a well-rounded CEO and CIO, building Octahedron Capital into a durable, high-conviction investment platform poised to manage significantly larger AUM. His openness, humility, and willingness to learn from mistakes are rare traits in this industry, and they've earned him the trust of investors and peers alike. Ram's partnership with his wife Anu, a formidable investor in her own right, adds a unique layer of synergy, insight, and access to the most promising corners of global innovation. Together with a young, driven team that shares a unified vision and embraces Octahedron's disciplined investment framework, Ram is not just navigating markets, he's shaping the future of tech investing. For investors seeking exposure to transformative innovation with a thoughtful, globally minded steward at the helm, Octahedron Capital offers a compelling and enduring proposition.